Hello, folks. Welcome to the show. Stock's down a little bit today. The primary story continues to be centered around the U.S. dollar as well as oil breaking into new highs, almost at 80 now. Bitcoin down a little bit today after a very strong up move yesterday. So we're going to discuss all of that, look at some critical levels and much more. But Monty, good morning. How are you, sir?
Good morning, CJ. I'm doing well. Thank you for that brief intro there. And yeah, lots to discuss today. I mean, Bitcoin has shown some pretty positive signs of price action, and I want to talk about the possibility of some continuation there. For anyone who attended our member webinar yesterday, we discussed in depth the first week of March. Typically during midterm election cycle years, we do see some positive price action for Bitcoin, and Bitcoin is following that to a T. So I want to talk about that. Talk about some possible upside targets, some gaps in IBIT, and then obviously talk about the dollar and oil. Can't skip those today, both very important. But CJ, how are you doing, my friend?
Doing good. I'm ready to get after it and just hop into Bitcoin here.
Cool, let's do it.
All right. So nice move, right? We broke out of temporary resistance and have gotten out of this range since yesterday. Very bullish candle. However, we are kind of coming up into resistance, although we do have gap fills higher in IBIT at about 78,000. We also now have lower gaps as well. Looking at the CCI, this is, very overextended. Same with the Stoke, beginning to pivot a little bit lower here. So traditionally, we want to be selling when the CCI is pivoting lower from overbought levels in bear markets, and then buying it in bull trends. And right now, I still believe that even though we might have a little bit of upside price action, we are still making lower lows and lower highs. We are in a macro downtrend with Bitcoin until proven otherwise. When we look at some of the other instances of when the CCI was at levels like this, we can see one of those instances was up here as well as up here in our previous range higher. When we hit these levels, in terms of the CCI and Stoke, price did have a tendency to return to the 20-day moving average, which now is, back within our range at about 67, 68,000. So, pressing down there, if we don't hold this current support level, could be possible. Either way, I think it's just something important that you got to kind of monitor. I would be more bullish on this chart if there wasn't such a bearish historical context when looking at a lot of the midterm years, which is what I'm going to get to now. It's just really astonishing and never ceases to amaze me how consistent and similar that these patterns have been in Bitcoin. This is the orange line. That orange line is the composite average of 2014, 2018, and 2022. And as you can see, usually we find a local bottom, maybe two local bottoms in early to late February before an early March rally. But as you can see, we're starting to get to that point where we are actually topping out, or at least we have seen that historically. Looking at it a little bit more specifically, I think it makes sense to compare it to 2022 because it's so similar in terms of the global geopolitical conflicts that we've just started. So, for example, the Ukraine invasion happened right at this point here in 2022 on that purple line. There was a initial bullish reaction to the news. Price came down and then went on to rally about 20 to 30%. Maybe we could rally a little bit more and follow 2022 based on where we're at right now in the current fractal of 2026. However, when we look at other cycles like 2018, for instance, here, we can see very consistent. We're seeing the, local bottom being put in March, or excuse me, in February, and then seeing that peak come in early March. And then finally, looking at 2014, the earliest bear market that we have this data recorded for, very similar thing, local high into the early to mid portion of March, and then, a continued decline lower. So I do think the rally is interesting. I think that, if we are going to compare this to 2022, then you could make the argument that maybe we see a little bit more upside But overall, I think if we're just averaging all of those together, we have to understand that there's a historical precedent for limited bullish upside in the short term. So just, you know, I think it's important to understand that context. Everybody has a tendency to get very excited after a big initial move, after a drawdown, but we've seen this before pretty consistently, so we're gonna just keep following that.
Yeah. You know, I think that it's very important to take 2014 and 2018 into context when considering the price action we're seeing now. But I think that 2022 has the most similarities to what we're seeing right now. And I think that we could see possibly a higher move up based on some gaps to the upside in stocks like IBIT. But let me just pull up this chart and talk about that real quick. So taking a look at IBIT here, I have Bitcoin overlaid with IBIT. I can just remove this so you can see the gaps more clearly. But, like CJ pointed out, the first week of March tends to be a positive week for Bitcoin during midterm election cycle years. If this is like 2022, then we could see some possible continuation of the upside. And I do want to present that case because I do think it's possible that we get some upside continuation after even a move back to the moving average, like CJ suggested for Bitcoin. I think that we could see a move up following that correction towards the moving average. So looking at IBIT, we have some notable gaps to the upside. This one's at 45 to 46.50. That would put Bitcoin at around 81,000. This is like the midterm bearish case or bullish case, excuse me. Like this is an interim target that I could see being hit, very soon. And then we have another gap up here at around 52 to 53.5, which would put Bitcoin at 93.7. That is like the ultimate bullish upside target. That would be, I'd be selling tremendously into a move up that high, because that would be kind of on par with what we saw in 2022. And I think the similarities are there from like a geopolitical standpoint. You have Iran and you have Ukraine, both of which the invasions kind of acted as a positive catalyst for price. I think that looking at IBIT and keeping in mind the Bitcoin prices, this upside target is something that I think we could hit very soon. And given the case that we saw, like what we saw in 2022, where we saw, some positive price action in the first week of March and continuation into the second week, I think that that is a case that we could see here, where ultimately, this gap could fill and we could see Bitcoin consolidate above its moving average. But, looking at Bitcoin, the short-term holder cost basis remains at about $82,000, which coincides with that gap in IBIT. So if we did get a move up to this range, I would expect to see a lot of these short-term holders capitulate into that move and cut their losses or walk away even from that trade. That would be very good if you did buy back here and are stuck holding the bag from like back down here. Getting out at this level would be very favorable, a very good bear market trade. And I think that that is a possibility that we could see that short-term holder cost basis become a reality for Bitcoin. That's what we saw in 2022, very similar macroeconomic circumstances as well. But one thing that I think is important to note is that the major indices are looking pretty weak today, and Bitcoin is reflecting that price action with a high beta. And we've kind of posited the question, can Bitcoin perform well during a weak equity market? And we have seen some signs that, yes, Bitcoin can show signs of independent strength. But ultimately, I think that a large portion of Bitcoin's positive price action in the next couple of weeks here will be determined by what we see in the equity markets. If we get kind of a bear market rally in the equity markets, then I think that Bitcoin does go higher and fill some of those gaps to the upside. But if the equity markets continue to drag and look heavy like they are today, I think it's going to be tough for Bitcoin to make that move to the upside. So one thing I'd look for as a leading indicator is, the major U.S. indices being green on the day. I think that would be a very favorable outcome for Bitcoin and lead to higher prices. We are at about 71,000 right now, but that's with equity markets green, and we're down about 2.5% today. So if the equity markets were red today, excuse me, if the equity markets were green, I would expect to see Bitcoin up about 2.5%. So the same degree of beta, just in the opposite direction. So, I think that the major indices are going to be very important. I think Bitcoin can't make a move to the upside without the Qs kind of breaking above this moving average and getting some upside momentum going. So I would like to see that in order for Bitcoin to really get going. But, I don't think it's necessarily a requirement. I think that even if we trade kind of sideways for the next couple of weeks here, that could allow Bitcoin the breathing room to move to the upside and fill some of those gaps in IBIT. So those are my upside targets for Bitcoin. I think that if we do get a bear market rally, those are kind of the two cases that we could see. So I'm watching those targets closely. But if we do get to those targets, I will be taking some profit on my short-term position for Bitcoin.
Yeah, I would like to move on now to kind of the macro assets, which I think are probably making it even more difficult for Bitcoin and stocks to rally, which have to do with the dollar and oil. Let's remember that these are traditionally assets that nobody from a risk perspective wants to see rally. I remember, just at the start of 2026, nearly everybody's outlook being bearish US dollar, bullish stocks. And over the past 2 weeks, that sentiment, or at least price action, has been largely reversed. And I think you have a lot of market participants who are holding equities, who are looking at the price of oil, because clearly that has ramifications for inflation. We know that Trump talked about having, the Iran conflict not go from, 48 hours to now 4 weeks. So the market's trying to wonder, well, how long could this potentially occur? Because there are serious economic ramifications. Looking at oil here, these are charts that no risk asset holding investor wants to see go higher. We've had this level marked out for a while in terms of this multi-year downtrend in crude that's now been severely broken to the upside, and likely will continue to move to the upside if these geopolitical conflicts continue, which at least at the current point doesn't look like they're going to be de-escalating anytime soon. So naturally, with those two assets, I think it's going to be very difficult for Bitcoin to rally. And maybe I think that the chances are much lower that it's going to reach 80K or even go up below maybe yesterday's price action, based on how bullish we're seeing this price action come out of the DXY and oil. Like I said, everyone wants these assets to go down, but they're not. And these are becoming very hated rallies that, we've talked about this so many times before, but this is just the classic diagnosis of what you would see at the end of a business cycle, is things like the US dollar and oil spiking higher, when traditionally in risk markets, people want those things to trend lower because they mean lower inflation. A weaker dollar is traditionally better for, risk assets and some, equities. It certainly has been bullish for silver and gold. But who knows? Maybe that macro trend could be shifting here. At least that's what it's looked like to start the month.
Yeah. And what I will say about the dollar is that $100 level is a very critical level for the dollar. Getting above that level takes some pretty serious momentum. And we do have strong momentum today in the dollar. So we'll see if it can break above that $100 level. But I wouldn't be too surprised to see tomorrow the dollar come off a little bit, oil come off a little bit, and see risk assets see some positive price action, because that $100 level for the dollar is significant resistance. And I think that we are running up into that right now. So I wouldn't be too surprised to see tomorrow, crude come down a little bit, the DXY come down a little bit, and see the Qs and NASDAQ rally as a result. But what are your thoughts on, how high crude can go here? Because, I didn't really take a position. I should have taken a position, obviously, last week. But now it's rallied significantly. What are your thoughts on the future performance of crude here as it sits, as it has broken that trend line that you highlighted?
Well, I just remember having a conversation with a few people last 2-3 weeks ago who said there's no way that oil will ever go to 90 under Trump. I don't think there's anything he can do about it necessarily now with geopolitical conflicts. So I could easily see it going to 90. And that's basically what ended the market rally in 2021 and 2022 when oil spiked, because it created such an upsurge in inflation, which then results of less probability of being able to cut rates, which is bearish equities. We all know these things. So, yeah, I don't think 90's off the cards. Would I be jumping in now? No, but it seems like a pretty consistent, like signs of a lockout hated rally to me. So
Yeah, I'm in agreement with you there. And kind of on that note, one thing that you talked about in extreme detail yesterday, but I think is worth mentioning today, is the uranium trade. Any thoughts on URA or CCJ today, as crude oil is up so significantly? Any thoughts on some of the big nuclear plays today?
yeah, I'll expand on that as well and kind of include, we've talked about really what we tried to identify was the bottlenecks of AI, and especially when it comes to commodity markets. So I think the three ones from a 5 to 15-year pure deficit supply issue are clearly copper, lithium, and then uranium. Now, I still think those things are long-term very bullish with the development of AI. I mean, the demand and supply dynamics are just, they almost seem inevitable in the next 3 to 5 years. However, in the short term, positioning is a very important thing. That's what can shift markets around in the short term, aside from just the longer fundamental trend. I do think that at the start of the year, excuse me, that a lot of people, you saw there were very few people publishing bearish thesis. I think it's like Michael Berry and Citrini are like the only retail publications that are really like pretty bearish. And everybody was really hating on them, really counter to their entire position. Like, how can equities go down? We have the most bullish fundamentals. And so naturally that positioning, I think, needed to come off and is probably going to continue to come off with, the seasonality of what we see in midterm election cycles. So probably lower, probably going to follow risk assets. I don't see any type of decoupling, but longer term trend, nothing has changed in the fundamentals. It's just that short term positioning. I think you got to shake people out because they're probably sitting on a lot of gains over the past year or two.
Yeah, absolutely. I think that certainly is the case with, stocks like CCJ and URA. But if you didn't catch yesterday's member webinar, CJ did a great report on the uranium bottleneck in the AI trade. So definitely go check that out if you haven't watched it already. It's definitely worth a watch. But one thing we also discussed yesterday, and CJ did a great breakdown of some of the crypto related equities. And in particular, he took a look at Riot, which I think is definitely worth a look here. So let's take a look at this chart, because Riot is looking really interesting. Now, one thing I will note is that it did have a pretty bad earnings report, missing on both earnings and revenue pretty significantly. But nonetheless, price is kind of holding the line here. You'd expect to see a bigger move down following that earnings report, but it is holding this moving average relatively well. And the fact is, it's positioned a lot better than most of the other crypto related equities at this time being. That's why I'm highlighting Riot, because I think that if Bitcoin does move up to some of the levels that we highlighted earlier in this show, we could see a move up to about $18 for Riot. I don't think that's out of the realm of possibility, and perhaps even a move up to the swing high at about 1930. I think that is certainly in the cards. Now, if you look at some of the other crypto related equities names like Mara, this trend looks a lot weaker. This is something I wouldn't invest in. They haven't diversified into AI like Riot, and thus they're not seeing the same form of speculation that Riot is getting right now. And since they're transitioning into kind of being a diversified fundamental asset, I think that Riot was tracking Bitcoin well. So even if we do get that move up for Bitcoin, Riot still does move in tandem with Bitcoin. And that's what we've been talking about. We've been talking about what stocks we'd like to own when this market does turn around. And I think Riot is definitely one for both CJ and I that we are watching closely in the months of September and October for a possible breakout, because, this one has diversified well and I think has the possibility of going higher. Now, we are down almost 6% today, but, it is holding this moving average relatively well, all things considered. And I think that there is a possibility that we bounce from this level. So, I'm going to keep an eye on Riot here. I think that Riot is the name to watch in terms of like if you're looking at MicroStrategy, Coinbase, Galaxy Digital, or Mara. I think Riot is the one to watch because its fundamental diversification I think can play a big role in further speculation to the upside. So if we get positive price action in either the Qs or in Bitcoin, I think that translates to positive price action in the crypto related equities, particularly in Riot. So I'm watching that one closely because I think we're going to see either tomorrow a pullback in the dollar and positive price action in the traditional equity markets, which leads to higher price in Riot, or we see the dollar kind of go flat tomorrow and we see Bitcoin rise, and I think that brings Riot with it. So whether it be Bitcoin or whether it be the traditional equity markets, I think both have the possibility to lift Riot alongside with them. So that's why I'm watching that one closely, but I'll keep monitoring that and updating you all in the Telegram as always.
Awesome stuff. Well, I think we covered a lot today, and that's everything that you'd like to go through, my friend. I think I'm good for today.
Yeah.
Don't forget, check out the QR code at the bottom of the screen. If you guys would like a 2 free week trial to get access to a lot of those reports, some of the imagery charts I shared earlier, and trade ideas analysis. We've been doing a lot more fundamental research lately to kind of supplement the existing trade ideas and other stuff that we've been doing. So been putting out a lot of more content. And if you guys would like to see a 2-week free trial, check out that QR code. Otherwise, hope everybody's having a great week out there, and we will talk again soon.
Take care, everyone.